Hello, my friends. My name is Rainer Teo, and welcome back to the weekly market analysis. So for those of you who are new, alright, or it's your first time watching this video, alright, the weekly market analysis is basically, me sharing with you my thoughts on the markets, alright, like trading setup, psychology, trade management, etc. So this is what I cover, right, each week on a weekly basis. So my trading approach primarily is that I'm a trend follower, right? I look to capture trends in the market. But for trend following, it's usually broken down into two categories, right? We have systematic trend following, where traders have very fixed and specific rules, right, to trade the markets to capture trends. And on the other hand, you have discretionary trend follower, which is me, right, where I look to capture trends in the market, but I use it, or I would say, I trade it with discretion, meaning I'll look at the price action of the markets, identify areas to enter my trade, have my stop loss, and to trail my trade accordingly. So I'm discretionary in nature, where I will analyze the price action of the market before deciding how I want to trade it. So that's my style, right? Discretionary trend following. So I would say that, in periods like this, right, like the markets you're seeing right now, it is good for trend followers. You've seen that, the recent volatility in the markets, the trend, especially across the yen markets, right, the indices, the oil markets, it is favorable for trend followers. So in today's weekly market analysis, what I want to share with you is the trades that I'm currently in, right, the positions that I've entered, why I entered it, how I'm going to manage it, and how I look to exit these trades. So this week's market analysis is going to be content packed, I tell you, right? So grab a cup of coffee, remove your distractions, and enjoy. I'll see you on the other side. Okay, so first up, I just want to run a quick one with you and share with you the positions that I currently have in the markets. So these are the markets that I'm currently in, right? Crude oil, Canadian yen, euro pound, pound yen, natural gas, dollar Canadian. And this is the dates that I entered my trades, right? Crude oil since November 12th, most of them in January, and the earliest is in December for dollar Canadian. So these are the prices I entered my trades. I shorted crude oil at $46. I scaled in once more at $31 and blah, blah, blah. And these are my stop loss, right? Because I always trade with a stop loss. I never put on a position without a stop loss, and these are my stop loss. And for those who are interested, what profit or loss I have, this is it. So that's it, right? Today's market analysis, I will walk you through all these trades, how I entered them, and how I look to manage these trades. So it's going to be quite a lot of information, right? So I suggest, right, if you want, pause the video, get a cup of coffee, right, and watch it through, right? So without further ado, let's begin. So first up, the first thing I want to share with you is the crude oil trade. So look at the crude oil. So crude oil, this is the weekly chart of crude oil. And if you look at it from left to right, what's the trend? Right? What's the trend? You look from left to right. I mean, any child can tell you that the trend is down. Right? But it's funny how we humans like to think that, we like to predict the market. So at this point in time, there are traders who say, oh, bottom of crude oil, it has bottom. When crude oil came up higher, oh yes, the bottom is official. But if you look at the charts don't lie. It's objective, right? It is the accumulative decisions of traders all over the world. Right? And this is the chart. At this point in time, just look at it. Right? If you ignore the financial media, you ignore the news, and price is at this point in time, right, of crude oil, do you think the bottom is over? Think about this, right? Honestly, if you ask me, right, just basic technical analysis would tell you that the bottom has not occurred. Well, you can be early, right, to try and catch the bottom, but that's not what a trend follower would do. All right, so I was bearish on crude oil for, man, if you've been following me on my weekly analysis, I've been bearish since, I think, last year, January 2014, or even before that. So my bias has not changed. The only thing that changed is that I enter the trades and I exit, right, and how I look to re-enter once again. So that's it, right? I was bearish on crude oil, but I was still waiting for a trading setup. So it came, I think, in a January, right? From what we saw earlier, right? It came in the form of this, right? This was the consolidation over here. So we had a strong rally and then price consolidated over here. So to me, at this point in time, right, my thought process is this, right? If crude oil were to be able to take out these highs over here, breaking above the resistance, then we can expect higher prices on crude oil. But if crude oil trades below this low over here, right, below this low over here, then it's telling you that the bears are gaining control and they could potentially resume the longer term trend. So since my bias on a weekly chart on the higher time frame is towards the downside, then needless to say, I will look to get short on crude oil on this daily chart. So this is what I did. I had a sell stop order, right? A sell stop order when price broke above these lows over here. All right, so I got short. Right, I had a stops of 2 ATR, which I believe is somewhere here, and then price went in my favor. Then I had to endure a little bit of pain when crude oil retraces against me, and then after which, right, it's just a smooth running all the way lower. Pretty easy to hold this trade. So as of right now, how I look to trail my stop loss on crude oil is this, right? I noticed that the 20 period moving average is acting as dynamic resistance. Right, just a quick one, right? This red line here is the 20 period moving average. Blue line is the 50 period moving average. I use the EMA, but whether you use the EMA or SMA, right, it's not really going to make much of a difference. So the red line here is currently where it's acting as a dynamic resistance on the daily chart, and this is how I'm looking to trail my crude oil position. So earlier you saw that I had one additional scale-in trade on crude oil. This is where I want to share with you. You look at the 1 hour chart, again, very similar pattern as the daily, just that it's faster paced this time around. So I got short on crude oil when it retraces back towards the 50 period moving average here. I got short once more and I scaled in my trade, which is here is about the $31 if you look at it, right? Around $31. So this was my second position on crude oil on how I scaled into it. Okay, so up next, this is on crude oil. Let's share with you, how about the Canadian yen? We talk about it, right? Look at this Canadian yen chart, right? Just look at the weekly chart. Bam! Isn't it bearish? I mean, if you're trying to long down here, right, then I would say, I hope you have a stop loss and good luck to you, right? Because I am not looking to long at all. Look at the grand scheme of things. We have this massive head and shoulders pattern, right? This is the left shoulder. This is the head. The right shoulder. This is the neckline. And it basically, trades lower after which. So I wish I got short somewhere here, but the thing is, I didn't get short, right? So let me share with you where I got short instead. So I got short, right, on the forward chart. Just look at this. I'm sure of those subscribers or followers who have been following me for some time now, you look at this chart, you probably know where I got short, right? Just look at the 20 and 50 period moving average. It's like, it's a dynamic resistance, right? It's like a magnet. Price is attracted to it. So if you know that price is attracted to it and it repels it afterwards, just find an area to get short. It's as simple as it is. So this week I got short on Canadian yen, and I believe I got short somewhere. Okay, if my memory serves me right, I believe it's here, right? If I'm wrong, then it's here. I'm not sure which it is, alright, but getting old, I would say. So it's a retest of the 20 period moving average is where I got short. So again, right, since I know that the price is respecting the 20 period moving average, then it makes sense to trail my stop loss using the 20 period moving average. So this is for Canadian yen. Look at the pound yen. Same story, same market condition, only different currency pair. I don't really need to explain, do I? I mean, it's pretty obvious to know where I got short. All right, the setup is the same. The context is the same. The sentiment of the market is the same. Right, it's all the same. Okay, so let's move on. So Euro Pound, I think this is something that's worth mention, right? So Euro Pound, I believe last week I talked about this, right? I said that there is a potential bottom on Euro Pound, right? I said there's a potential triple bottom. The thing is, I never know. There's one test here, second test here, third test here, and this was the resistance area. So what happened last week is that price, I would say 2 weeks ago, it break and close above the resistance area. So this week, price had a follow through. So usually what happens is this, right? There is two options that will usually happen. Number one is it follows through, or number two, it's a false breakout and price close lower. So honestly, right, I have no idea which way it's going to play out, but I just follow my trading plan. So my trading plan is this. When I look at a 4-hour chart, I notice that the 20 and 50 period moving average is acting as dynamic support. So I was looking to get long on the Euro Pound. So if you look at this chart, ask yourself, where is the obvious place to get long? Think about this. 5, 4, 3, 2, 1. Alright? So I believe you think along the lines of, Rainer, the chart looks like the 2050 is respecting it. So needless to say, as price retraces back to the 2050 period moving average, I'll look to get long. And if you think along these lines, then great. Because that's what I did. Right? As price retraces back towards the 20 period moving average, I got long. So if you can think along these lines, then congratulations, right? You are along the way to becoming a successful trend follower. Okay, so this is what I did for the Euro Pound. And since I noticed that the 20 period moving average is currently acting as dynamic support, then needless to say, I'm using this to trail my stop loss, right? I don't have a fixed profit target in mind, right? Because this is a trend following positions. I'm not swing trading, so I will trail my stop loss until the market takes me out at whatever, at whatever prices that it is based on my trailing stops. Okay, so this is for the Euro Pound. Another market that I want to share with you is Dollar Canadian. This was the position that I held for really long time. Well, it's about slightly more than a month. But let me share with you why I went long. For those of you who missed out. So I went long here, right? Let me scroll back in time. It looks something like this. Okay. So most traders, they look at this chart and say this. Oh, Rainer, price is overbought. Right? Look how high it is. Right? It's at resistance over here. It has to come down. Look, the consolidation over here, right? Chances are once it breaks out the lows, it's going to trade lower. So that is what most traders are thinking. But I'm a trend follower. I tend to think differently, right? I think of buying high and selling higher. This is me, right? This is the hallmark of all trend followers. We buy high and sell higher. We sell low and cover back our trade lower. So at this point in time, to me, this is a sign of bullishness. This is a sign of strength because number one, I have the trend with me, right? We have higher highs and higher lows. Number two, notice this consolidation just in front of this resistance area. Most traders would think this as, the bears are coming to the market and about to push price down lower. But for me, I'm thinking along the lines of strength because if price is at an area of resistance and it is consolidating just under the area of resistance, what is it telling you? Well, you know that an area of resistance, price should trade lower from it in a short period of time. But right now it's consolidating just under the resistance, an area where the sellers are known to come into the market and push price lower. But the sellers couldn't do it. Why is that? Now that is the question. Why is that? And if you think hard enough, it's because there are buyers who are willing to bid price higher. They are willing to buy at this price despite being under resistance. So this to me is a sign of strength. I like this setup. Right? Some traders call this a cup and handle setup, right? If you call it. And it looks something like that, right? This is the cup, this is the handle. Fair enough. And whatever the pattern is, it's more important to understand the price action of the market. And when I talk about price action, I don't mean pin bar and engulfing pattern. I mean reading the sentiment of the market, reading the strength, reading the weakness of the market. That is what I mean by price action. Okay? So don't worry if the price action still seems very foreign to you because in about 1 to 2 weeks time, I'll be releasing a guide, right? The advanced guide to price action trading. And keep a lookout for it, right? If you want to be updated, get onto my mailing list at tradingwithrainer.com and you'll be updated when it's released. So back to the markets, right? So where I got long is I placed a buy stop order above this high. Right? I really like this setup. So I had a stops of 2 ATR as well. So buy stop order here, 2 ATR is somewhere here. And well, you know what happened next, right? Price then rally and went in my favor and it's an easy trade to handle. But hey, right, I could be wrong. Of course I could be wrong, right? I'm never right all the time. So if I'm wrong, I have my stop loss in place to prevent further damage to my trading account. But in this case, right, I'm fortunate it went in my favor, then okay, so be it, right? I got aboard this trade. So for traders looking at this, right, there was another pattern over here which I did not enter because I didn't want to be too aggressive in scaling in just yet. This was another flag pattern that you could have traded. And if you saw this week's inside bar trading video, we talk about flag pattern. So one way you can go about entering is place a buy stop above this high, right? Stops of 2 ATR, and this would have been an easy trade as well. So as of right now, I'm looking to scale in my dollar Canadian trade, but notice that I did not use the dollar Canadian. Instead, I went short on the Canadian yen, right? So this is my way of expressing my opinion on the markets, but I didn't want to use the dollar Canadian. I traded the Canadian yen instead because I find that at that particular point in time, the setups were looking better. All right, so that's it. There is still opportunities to get on board this trade. Look at the dollar Canadian. If it retraces back towards the 20-period moving average, it's an opportunity for you to get long. Okay, so that's it. Let's move on to the final market that I've yet to talk about. It's the natural gas. So look at natural gas. This is the weekly chart. And what is the trend of natural gas? Tell me. 5, 4, 3, 2, 1. And I hope you said it's a downtrend, right? Don't tell me this is an uptrend, right? Because if we are looking at a weekly time frame, based on what is in front of your screen right now, it's a downtrend. There is basically no arguments about it. You have lower highs, lower highs, lower highs, lower highs, and lower lows, right? If you think it's an uptrend, chances are you're looking at a different time frame, right? All of us right now are looking at a weekly time frame, and the trend is down. So the trend is down. The next question is this: where are you going to enter your trade? Right? Just because a trend is down doesn't mean that you have to be in the trade, right? You need a trading setup, a valid trading setup that meets your requirement as well. So this is what I got in this week's market. On the weekly time frame, you saw that the trend is down. And on the 4-hour time frame, I noticed that there is a potential head and shoulders pattern, right? This is the left shoulder, this is the head, this is the right shoulder. A bit small, the right shoulder, but still I classify it as a head and shoulders pattern. This was the neckline. And I saw, right, as price is consolidating over here, I really like this because I know that there will be bulls, right? People who are bullish looking to get long, right? Because they see this consolidation over here and they think, oh, the market is holding up and it will push higher after which. So chances are they will get long in this consolidation and get their stop loss below this low over here. But for me, I'm a trend follower. I noticed that the weekly trend is still towards the downside. So I'm using the information on the higher time frame to trade on the lower time frame. So on the 4-hour chart, I have this so-called, I won't really call it insider information, but this is the analogy, right? So-called insider information to where price may potentially go to. So I went short on the break of the neckline over here, right? And in this case, I think I went short on Friday or Thursday, I can't remember, and then price went in my favor. It's still too early to tell whether this trade will yield, be a winning trade, or it could just be a deeper false breakout and then you rest and then you rally higher. That could happen as well. So this is why I always have my stop loss in place. Always, right? No question about it, no doubt about it, no hesitation about it. Okay? So by now, right, I think this week you should have realized that every trade that I'm sharing, I'm pointing out, it's a winner. Everything's a winner. But I want to caution you is this, right? Because I've experienced this before, right? I let it get to my head. I got complacent and I got way too aggressive in my trading. So as you can see right now, I've quite a bit of open profits, right? And I have trailed my stops accordingly. So instead of, being too happy, too excited and, being, trying to brag, instead, I'm thinking along the lines of, I know I can risk losing all these potential open profits. So I know, number one, I need to manage my risk, right? Trail my stop loss according to my rules, manage it accordingly. Number two, I'm a trader who likes to scale in. But just because I have a lot of open profits at this point in time, I am not going to scale in ridiculously, meaning that I just scale in based because of I feel like it, right? Rather, I will only scale in trades that meets my trading rules, right? Just because you have a lot of open profits doesn't mean you can buy and sell anything and it's going to make profits for you afterwards, right? No, right? You still have to follow your rules. Those rules are what got you where you are right now. And if you break those rules, I can tell you, you're going to break yourself. Okay? So this is important to bear in mind, especially traders who have been following me, trading similarly like me. I believe you have probably captured quite massive trends over the last few weeks. So bear this in mind, right? Manage your risk, right? Don't get too cocky. Do not get too proud of yourself. Do not get ahead of yourself. Manage your risk. Manage your open positions. And number two, if you're going to scale in your trades, scale in smaller and scale in trades that are according to your trading plan, right? Remember, the markets can do anything to you. Just because you're ahead this week or this month does not mean that the next month or the subsequent months you'll still be ahead. There will be bad times, there will be good times. And right now we are in good times, but do not forget, the bad times is just around the corner. Okay? So that's all I have for you in this week's market analysis. I hope you find this useful. And oh yeah, another thing, just a quick one, right? You know what? I'll share the news with you next week instead, right? So with that, right? If you have any comments, any feedback, just let me know in the comment section below, right? With that, I wish you good luck and good trading. I'll talk to you soon.